quickly and get a view coming in from Lyn Alden, founder of Lyn Alden Investment Strategy. Lyn, very good morning to you from where we are here in Mumbai. How do you look at this 25% plus penalty for India?
So it's obviously pretty significant. It's in line with the rest of the trade war that the president is currently doing. As you point out early in the program, so far it seems that the majority of the tax, the tariff, is paid for by American consumers and to some extent American businesses, with only a smaller portion being paid basically by exporters reducing their prices. And so ultimately, this is a tax mainly on the American people, but of course it does have trade implications for volumes. And as we generally see, some of these negotiating tactics start out strong and then get worked back with some degree of, managing toward optics. But I do think that the tariffs are probably the biggest thing. I mean, more so than FOMC and more so than other factors. I think the tariffs are pretty much the biggest macro thing to track currently.
Lyn, hi, morning. Seemingly, a lot of people anticipate, and this has become the base case scenario, that this is a gambit, that it was initially supposed to be close to 15%, and then as a negotiation tactic, you push it up and you say, hey, look, because you're doing X, Y, and Z, which I don't like, I'm going to levy 25% tariff. And so the market takes it with a few grains of salt, to say that, lightly. But do you anticipate that? Is that safe?
I wouldn't call it safe, but I think there's some directional truth to that, which is to say that they generally start with a stronger negotiating position than they tend to have the final result that they can then negotiate it down from. I think that the big factor, though, is that even the final result of the tariffs is not as low as what the market would like and what it was maybe expecting some months ago. If we end up with an average of something like 15% across the board tariffs as a global average, that's still very significant. That's a multi-hundred billion-dollar annual tax bill that's mostly on Americans, but it also does affect foreign exporters, volume levels, potential shifting things around and having to change supply chains. And so it's an ongoing factor, even when you consider that the average tariff rate a year from now might be 5 to 10% lower than the headline numbers we're seeing today.